Hello everyone! Guess what day it is? That's right, it's Mortgage Tip Tuesday with your favorite loan officer in the whole wide world. It's your girl, hashtag JLoan. Hey, I hope that you guys are having a fantastic start to your week. I got some great information to bring to you today, but as always, let's talk about what today is. Today is National Graduation Tassel Day. This is a day where we take the time, now is the time in the next 2 weeks where kids are going to be graduating and we're going to be celebrating their educational success and wishing them well on their new journey, whatever that may be. Graduating from kindergarten and going to first grade, graduating from high school and going to college, and some of our college graduates heading on into their careers. Today's the day and moving forward that we are going to honor them and just let them know we know what type of hard work that it takes to make it through all of this education, and we wish them the best in whatever they choose moving forward in their lives. So moving on to Mortgage Tip Tuesday, I want to talk to you a little bit about grants today, and I want to talk to you a little bit about some misconceptions of grants, and I do also want to show you a way that you could use a grant in today's market to kind of help you with a little bit of leverage. So to my listing agents and my buyers, I do want to talk about why you should accept using a grant, especially in this market. So let's talk about a little bit of my points behind. Okay, so number one, the buyer will not need your concessions to pay for cost if they get a grant. So whenever you go to buy a home, depending on what you want to put down, you have your down payment of anywhere as low as 3 all the way to whatever you decide, whether that's 20% down. But that just takes care of your down payment. There's cost on the backside, which are your closing costs, which I typically estimate or tell people to estimate that is 3% of whatever your purchase price is. That should give you a good idea of what the cost would be to close your loan. And there are times that borrowers have their down payment but not their closing costs. There are also times where appraisals come in short. There is also times like in this market today where everyone's offering over asking price. There's a lot of things going on. So how do you make your offer stand out? Well, one of the things you could do is in this market, you truly just can't ask sellers to pay for anything, because if you want them to pay for it, there's 30 offers behind you that will not ask them to do it. So one reason to use that grant is so that now you can actually pay for your own cost to close the loan and not look at the actual seller to help you with those costs. So this is a benefit to the buyer. This is also a benefit to the seller to keep your proceeds in your pocket and not giving it to the buyer at closing. Another opportunity is it gives the buyer a unique opportunity to offer over asking and use their own funds for the difference. So the biggest thing you have to remember in this market is you can offer whatever you want on a home that you want, but the reality is that if you are securing financing, the lender is only going to lend you on the lower of the two. So if your purchase price comes in and your appraisal comes in under that purchase price, if you decide to proceed, would now be responsible for the difference between the appraised value and what that home is actually selling for. So the biggest thing is this could help you in that gap. Let's just say you have the money to close, and now you have a situation where you really want this home, but it came in $5,000 under the sales price of the value. And so now you say, well, I don't know if I have the funds to buy this home. Well, now that grant could help you with that difference, and you can use your cash to pay for that difference. So that's just one unique way. Another unique way is you can offer more. than what the home is selling for, knowing that you're getting a grant and you're using your funds and the grant combined. So it gives you more buying power if you need it in this market. Number 3, getting a grant doesn't necessarily mean that a borrower doesn't have cash to close. And that's the reality. I have tons of borrowers who take the grant because it's free. You don't have to pay it back. Right now, especially in our market, our grant rates are doing much better than the actual market rates. So there is a huge advantage that if my borrower qualifies for this grant, it's my job to at least offer it to them. Whether they want it or not, that's up to them. I don't see a disadvantage of doing it, but if they want it, it's there for them. And the only thing you have to do is take a home buyer education course that is also free. So there is advantage for a buyer that even with money, because buying a home, you have your costs, you have all these things, but once you close, now you got to furnish that home. Now you have to figure out how to fill in all this space that you didn't have before. And if you exhaust all of your funds, what are you going to do to get that besides increase your debt by taking on these 0% 24-month financing opportunities? That's not always a good way to move forward by increasing your debt after buying a home. So this grant could help you to do that. Number 4, getting a grant also doesn't mean a borrower makes little income and barely qualifies. So yes, there are grants. Most of the time your city and your county grants, their income levels are typically a lot lower than your state grants. But our grants here, some of them go all the way up to, depending on the county, so don't quote me here because every county is different in the whole state of Texas. But we have some counties that go all the way up to $121,000. And this is not combined household income. That could just be one borrower on the loan, and that's what they make. That's not a low income home. So they do qualify. It just really depends on what type of loan, what county it's in, and that's how we determine based on the guidelines to it if they qualify. And these grants don't just come in FHA, they come in VA and also conventional. Now, conventional guidelines as far as income is a little bit tighter, but again, once we look it up, we'll give you what is there, and you could choose whether this is a good option for you or not, okay? And then as far as barely qualifies, just because you're getting a grant doesn't mean the guidelines change. In fact, the guidelines actually get a little stricter because of the fact that now it adds a layer of risk. Whenever you get outside cash that is not coming from your actual assets on your own bank account, when you run it through automated underwriting, that is considered a layer of risk, that the borrower is not using all of their own money to make this purchase. So sometimes you can add a grant to a file, run it through automated underwriting, and it'll actually turn it down because of that layer of risk. So these borrowers have to meet the same exact guidelines for FHA, Fannie Mae, Freddie Mac, conventional, anything, VA. All of those guidelines don't change just because you're getting a grant. Like I said, I feel it's actually a little bit more stricter for you to qualify. And then last but not least, not all grants require a second approval or have long-term times. Again, when you're using your city or your county grants, those take longer. Those are like a 6-week or longer process sometimes, and the borrower has to go to a big process to get those county grants. But when you're using state grants, whether that's TSHAC, TDHCA, Seth, and then of course my favorite is the one we have here in-house, which is HAT. And most of the grants have, so for instance, TSHAC requires a second approval. There's a couple days after you submit the loan that they have to review it to make sure it's there. There's a lot of grants that don't have that. So we have one here in-house that does not require a second approval. It's our approval, and then they provide the funding at closing. So again, take out the misconception that it's going to take longer to close your loan, because we close those in the same amount of time, if not sooner, than a regular traditional FHA conventional VA loan. So just get that out of there. They're just going to take you longer to actually close the loan. The biggest thing is I want borrowers to feel like they still have the power in this market. It's still a seller's market, but buyers need to feel like they have a little bit control. And I feel that grants will give them a little bit more control because now they can use their money plus the added funds. So think about it, on a $300,000 home, a 3% grant is going to give them around $9,000. Now it is 3% of the actual loan amount, not the purchase price, but it's going to give them that feel that they can use their own money and use this as an added advantage to help them either offer more, cover an appraisal gap, anything of that sort. So if you feel this video is helpful, as always, please don't just like it, comment, share it. Maybe someone is feeling like they want to back out. They don't know which way to turn and they need some help and don't know that there's programs out there to help them. So if I can help them in any way, again, if it's me, it's great. If it's someone else, that's great as well. We just want to help borrowers get into homes and start owning their own and building equity and just really being able to feel strong in this market. So if I can help them, please refer them to me. As always, I hope you have a safe and a blessed rest of your week, and I will talk to you next Tuesday. Bye-bye.